it's kind of a perfect storm right now, and it is alarming. I feel that when we get an event, you're not going to be able to react. It's going to hit you like you're the bug on the windshield.
I think real estate and commercial real estate is the next shoe to fall. And when that falls, we have another banking crisis 2.0, which means they got to print more money, which means Bitcoin goes up in value relative to a debasing US dollar.
Hey guys, welcome back to Let's Talk Crypto. There is a lot happening in the macro landscape right now, and it is not looking favorable for the US economy or the dollar. However, this is actually good news for Bitcoin. In a recent interview with Simply Bitcoin, Greg Foss and James Lavish discussed the upcoming events that are creating an ideal environment for Bitcoin to thrive. After all, the leading cryptocurrency was designed for times of crisis like the one we're facing. Foss believes that a credit crisis caused by a major real estate crash will lead to a recession, which will be beneficial for Bitcoin. Bitcoin is the perfect life raft against currency debasement, which will continue to accelerate as the Federal Reserve prints more money to save the economy. Let's listen to Greg Foss and James Lavish as they paint the scenario that will trigger a massive run on Bitcoin, leading to an increase in its price. But before we do, please consider subscribing to our channel, as we bring you daily content on the latest crypto news. And now, let's jump right into the video.
When we turn around and cut off Russia and we seize their assets, that made every single country who's on in the gray area with the United States question whether or not they want to be holding treasuries. Like, do I want to hold something the U.S. can seize that's sitting at the New York Fed? Do I really want to do that? Probably not. Especially if I'm a country that's kind of on the fringe. If I'm China, definitely not. It's kind of a perfect storm right now, and it is alarming. It's alarming. So the question is, do the other oil providers, the exporters, like Saudi Arabia, do they join this new currency that's kind of being put together between Brazil, Russia, India, China, and South Africa? Do they join? And Iran and Saudi Arabia? Because if they do, man, that is going to be a really, really powerful negative blow to the U.S. Treasury. But Greg, what are your thoughts on it?
Yeah, no, I have nothing to add there. But let's not overthink this. This is happening, okay? I'll take it one step further. I think Putin already is planning to price oil and natural gas in Bitcoin, because fiats are all debasing, okay? Whether you have the best looking horse at the glue factory, which is the US dollar and the petrodollar, versus other even worse fiats, they're all debasing. The solution is actually to sell oil and natural gas priced in Bitcoin. So you get Bitcoin, digital energy, as payment for your natural resource energy. Why? Well, because it's like a closed loop, okay? Think of a closed system in physics. And open systems don't work, which is to say a leaky hydraulic system that's open where you can print more money. That's a leaky open system versus a hydraulic system that's closed where you pay digital energy for natural resource energy. That's the stuff that a engineer like myself, or some physicists, maybe not all of them, but certainly Michael Saylor eloquently describes this. So this is just an interim step. All fiats are debasing, people, because all fiats have the same problem of the US dollar. They've borrowed too much money. They have to print money, just interest expense on the debt. So the debt is growing organically just because of the coupon on the debt. Same in every country in the world, because total global debt is 4 times as large as global GDP. It's simple math. Banks in North America are generally levered around 20 to 25 times their equity base. Europe is over 30 and sometimes as high as 40 times their equity base, which is another way of saying if the assets on the bank lose only 2.5%, they're done. Okay, gone. It's over. They're insolvent, just like Credit Suisse. So this is crazy, guys. Understand that banks are always levered, especially when they bring off-balance sheet assets into the equation, which are the derivatives we've talked about and everything. It is so severe that a couple of little cracks here and there, and the whole system falls apart. Why do you think they were so nervous about CSFB, or Credit Suisse rather? Because when Credit Suisse wavers, all their counterparties like Deutsche Bank and BNP and the big European banks, they catch a cold as well. And if Deutsche Bank goes down, and the credit default swap market was saying they had some stresses, if Deutsche Bank goes down, there's nobody that's going to combine with Deutsche Bank. It has to combine with the country of Germany. Okay, it's that simple. When credit gets choked off, Nico, like we're right within a rounding error, not even a rounding error, with a statistical error of being in a recession right now, and all of a sudden you get hit with a credit crisis. Well, look, I don't even care, because all paths lead to Bitcoin. I just don't care. Like, just stop trying to fine tune this idiot needle. It is indifferent as to whether there's a true recession as defined by the Bureau of Labor Statistics versus everyone knows it's a recession, but we're going to redefine what a recession is. And by the way, a recession is going to be good for us as soon as it hits. They're going to make some reason that it's good for us. Guys, it doesn't matter. All of this means that the debt burden explodes even faster because there's no tax revenue to pay the existing debt burden, which means they got to print more money, which means Bitcoin goes up in value relative to a debasing US dollar. Hey, you want to start measuring Bitcoin in something that can at least keep pace with Bitcoin? Oil and Bitcoin. That is going to be a much better pair to look at than oil versus US dollar, or or Bitcoin versus the US dollar.
Yeah, agreed. Totally. Looking at something that's an actual commodity, The problem is that I feel that when we get an event, you're not going to be able to react. It's going to hit you like you're the bug on the windshield. Like you're not going to be able to react. You better be, positioned accordingly now. Don't wait to position. I'm talking about just like right now, being focused on, there's going to be some huge opportunities, because when something hits, man, it's going to be painful. And then it's a gut check.
I think real estate and commercial real estate is the next shoe to fall. And when that falls, we have another banking crisis 2.0. So 2023.2 instead of 2023.1, which was an interest rate event. Then it's going to be a credit event. So watch CMBS. Don't own bank stocks. That's probably my best advice possible. Do not own bank stocks. Now, particularly in Canada, everybody owns bank stocks because they pay a healthy dividend. You guys haven't done the math. You are not making a proper return on the risk you are taking owning bank stocks. Banks can get bailed out, but it doesn't mean that their stocks maintain value. Look at what happened to Credit Suisse, which James and I were calling for 3 years, that they were in trouble. Okay. The bank went from being worth $14 billion to getting restructured at $3 billion, which meant you lost 70% of your bank equity investment. And to accomplish that, guys, they had to write off bonds worth $17 billion down to zero. Who's the biggest issuer of these so-called COCO bonds now? Oh, it happens to be Deutsche Bank. Isn't that interesting? Because everybody's worried about Deutsche Bank right now, as they should be. The contagion risk exists. I don't mind what Bitcoin is doing in fiat fucking dollars. 1 Bitcoin equals 1 Bitcoin, and that is your lifeboat, okay? So I don't want the global financial system to collapse. I need to be very clear about that. But they're doing a hell of a job at making it do so, okay? They're undercapitalized. They're mismanaging their risk. You got a clown called Yellen, supported by a clown called Powell, and they can't even get on the same page. Oh, we're gonna insure all unsecured deposits. Oh, well, we've decided we're not going to secure all unsecured deposits, when Powell is on the podium at the very same time at the press release saying he's going to do it. This is a circus act of monumental proportions, and Yellen should be out watering her petunias. Get that stupid fool off of fucking television. I love grandmas, but I don't love grandmas who manage the U.S. Treasury, okay? Go water your flower, Grandma. You are an embarrassment to financial risk management.
As de-dollarization accelerates, Bitcoin is a solution to protect one's wealth in these uncertain times. Greg believes that the next shoe to drop will be commercial real estate, which will trigger a banking crisis 2.0. Therefore, Greg's advice is to stay away from bank stocks and focus on hard assets like Bitcoin. What are your thoughts on his forecast? Let us know in the comments below. If you enjoyed this video, please make sure to give us a like and subscribe. Thank you so much for watching. This is Let's Talk Crypto, and we'll see you in the next video.